Hello, good morning, friends. Today I am going to take up a new chapter, income from business and profession under direct access. This chapter is also named as profits and gains or profits and gains or profits or gains from business and profession. This is Professor Ramesh Kumar Mehta from JSPM's Rajeshri Sahu College of Engineering, MBA department. Okay, so before I give details of this particular chapter, let me give some examples and let's get some orientation towards what we are going to speak about, what we are going to discuss about, and what do we mean by income from business. Okay, so generally it happens that uh, there is a trading which is taking place, or manufacturing which is taking place, or any profession is been carried out, and there is a element of receipts, element of payments, and element of gains from these activities. So we have seen income from salary, income from house property, income from other sources and capital gains. But the third source of income is income or profits or gains from doing or conducting business or from profession. Okay, so let's look one by one what we mean by profits and gains from business or profession. Okay, for example, Mr. X is there and he is doing a stationary business. So he will purchase goods and sell goods, and thereby there may be element of for profit. And this element of profit is the income from business or profession, or profits or gains from business or profession. In the similar way, a manufacturing unit is there which is manufacturing cement. So this company manufactures cement and sells, and the primary motive for doing this business is making profits or earning profits, and this is another source of income. That is, profits or gains from business or profession is an source of income, and it is going to be taxed. So now let's understand what we mean under section 37 of income tax act 1971 1961 62. This section is a residuary character, which means any expenditure not allowed under provisions of section 3 on, and which is not under the provisions of as deduction under this section if it employs with the following requirements. So what it primarily means is that certain expenditures are not allowed. Now, what is the importance of expenditure in accounts of an business entity? Okay, let's understand that phenomenon, because this is the phenomenon based upon which income from salary, income from business, or profits from business or gains can be calculated or computed. Okay, for example, if you look at the profit and loss account of a company or a business, generally it is having a trading account and followed by profit and loss account and balance sheet. But primarily we are concerned as far as finding out the net profit of the company, because the net profit is the one which is the base on which the basis for levying taxes. So trading is selling. So you have purchases here, and you have uh, sales on the other side, opening stock and closing stock, and we will get from this activity a residual called as gross profit. This gross profit is carried on the profit and loss account credit side. This is a debit side, this is a credit side, and gross profit is placed here. And there are so many expenditures like office and administration overheads, selling and distribution overheads, and other expenses. and from this gross profit all these expenses are deducted, and finally you will get net profit. So this is the way, this is the uh, procedure to find out the net profit. And in the preparation of the profit and loss account, there is a probability, or there can, which is there is a probability of committing an error, and because of this reason maybe the net profit can be maybe inflated or deflated, and hence because of this reason the calculation of the net profit is wrong, and subsequent payment of tax, computation of tax also is there is maybe element of error. So some of the errors which are normally committed deliberately or otherwise, or intentionally or unintentionally, but there is a chance of committing these kind of errors. For example, if I show on the debit side of profit and loss account expenditure in the form of building. So building is a capital asset. So capital asset is not to be shown on the debit side of profit and loss account. So this is an error which has been committed, and because of this reason, the expenditure is uh, is on a high in comparison to the otherwise. If this is not shown, which is not to be shown, then the net profit would have been more, as the expenditure would have been less, because this expenditure is not an allowed expenditure. In the same way, if I forget to show a particular expenditure and as an expenditure, for example, depreciation, I should have shown, and I forgot to show on the debit side of profit and loss account. It means that a particular expenditure which was allowed, but I forgot to take a note of it on the profit and loss account. And because of this, what has happened? The expenses are low, and because of this, the profit is more, and eventually you are paying more tax. So there are some expenditures, incomes which have to be recorded properly. If it is not recorded properly, then the net profit which is calculated may be wrong, and because of this, the tax what the assessee is paying there may be a mistake in that one, in the sense that he may have paid more or less, because the calculations of the profit and loss account, the trading account, and the subsequent net profit what we have determined may be wrong. So there are some general rules to be followed under the heading income from business or profession, or profits and gains from business or profession. So we are going to talk elaboratively and comprehensively what are these expenses which are allowed, what are the expenditures which are not allowed, what should be the nature of the expenditure, what are the incomes which are not allowed, and what are the incomes that are allowed. So let me give one more example. Let me give one more example of committing a mistake as far as calculation of net profit is concerned. For example, if I show, for example, if I show on the debit side of profit, on the credit side of profit and loss account, if I show on the credit side of profit and loss account, for example, an income from house property or rent from house property. So there is an error which has been committed in the sense that, see, income from house property should be shown under the head income from the house property and not under business income, because business is different and owner is different. Owner, if he is having a house in his name, and his one house is self occupied and the other house is let out, that particular rent from the let out house property should not be shown under the head income from business, or it should not be credited to profit and loss account. For example, another income is dividend income. Dividend income is income from other source. This is not a business income. So it should not be shown on the credit side of profit and loss account. So by doing so, you are committing a mistake. You are committing a mistake. You are committing a mistake. So you should not have done that. Because of this, the profits are affected, and the subsequent payment of tax also is the calculations have gone wrong. To overcome this problem, we have to follow a standard procedure. Let's look at the in-depth details of the theoretical part of the chapter. And let's understand one by one. So in this case, what it means to say is that there are some expenditures which should not be shown on the debit side of profit and loss account. That should not be shown on the debit side of profit and loss account. What does it mean? It means that, for example, expenditure should not be in the nature of capital expenditure. And if it is a capital expenditure, it should be either amortized or it is to be depreciated. And that amortization amount and the depreciation amount should be shown on the debit side of profit and loss account. Should be shown on the debit side of profit and loss account. Another expenditure is personal expenditure. So personal expenditures like uh, rent of the house of the owner is shown on the debit side of profit and loss account. Is shown on the debit side of profit and loss account. So this is wrong because this is not an expenditure which belongs to the business. So it should not be shown on the debit side of profit and loss account. Another expenditure is salary paid to the maid, and that maid is working in at the home. So this is an expenditure of the household. This is an household expenditure. This is a personal expenditure, and there is no connection between this expenditure with income from business or an expenditure of business. Hence, because of this reason, it's advised that any expenditure which is capital in nature, capital expenditure in nature, or personal expenditure in nature should not be allowed to be shown on the debit side of profit and loss account. And if at all by mistake it is shown or deliberately it is shown on the debit side of profit and loss account, it has to be overcome by rectifying those entries. Another expenditure, another particular rule is expenditure should have been incurred wholly or exclusively for the business or profession of the assessee. So what it means to say is any expenditure which is incurred, it should be incurred wholly, fully, and exclusively for the purpose of the business or profession of the assessee. If it is not incurred wholly or exclusively for the purpose of the business, then it should not be shown on the debit side of profit and loss account as an expenditure, because this expenditure is not a pertinent expenditure to the business or profession, and rather it is one which should not be shown on the debit side of a profit and loss account. Because if you show an expenditure on the debit side of profit and loss account which is not expended for the purpose of the business, then it is not an expenditure. And if it is shown on the debit side of profit and loss account, it means that you are inflating deliberately or unintentionally the expenditure of the business. If the expenditure is affected, then naturally the net profit also gets affected, and because of this, the profit also the tax what the SSC is paying is the wrong amount which is paying. So there are some guiding rules which have to be taken into consideration for calculating the net profit of the company, net profit of the business. Next one, it should be an actual spending and not a payment of liability. So this is also a general rule that has to be followed. It should be an actual spending or and not a payment of liability. It should not be contingent liability and or an anticipated loss. For example, generally it is shown on the debit side of profit and loss account RBD, reserve for bad and doubtful debts. So this is a reserve which is created in the anticipation that there can be a bad debt. So it has not incurred. It is an anticipated loss. So anticipated loss or unforeseen losses, or just we are assuming that this is going to be a loss. So this loss is not taken place, and it is not to be shown on the debit side of profit and loss account. So what I mean to say is any reserves or provisions like provision for income tax or provision for sales tax or provision for bad and doubtful debts are not allowed as an expenditure, because these are all anticipated losses, and anticipated losses have not taken place, and hence they should not be shown on the debit side of profit and loss account. Next one, expenditure should have been incurred on account of commercial expediency. So, for example, you are purchasing raw material. So, this raw material is purchased for manufacturing goods. So, this is an expenditure incurred on account of commercial expediency, or you're paying wages, you're paying salaries, you're paying salaries, you're paying a stationery bill. So, all these expenditures are required for conduction of a business or furtherance of business, and they are allowed to be shown on the debit side of profit and loss account, and you can genuinely claim as an expenditure. Next one, expenditure should not be incurred before commencement of business. So if any expenditure is incurred before the commencement of business, it should not be shown as an revenue expenditure. Rather, you have to show it as a capital expenditure, and there are some rules and regulations, and we have to follow those, and it has to be amortized. So there is another expenditure called as capital expenditure, opposite of capital expenditure, which is revenue expenditure. Revenue expenditure is nothing but the expenditures which are supposed to be shown on the debit side of profit and loss account. Expenditures which should be shown on the debit side of profit and loss account. For example, the finite example is purchase of raw material, or payment towards wages, or payment towards freight charges, or payment towards coal, coke, gas, or payment towards salaries, payment towards stationery, telephone bill, or electricity bill, or office and administration overheads. So these are all revenue expenditures. So revenue expenditures are allowed to be shown on the debit side of profit and loss account because these are genuine expenditures and regular expenditures. And as a matter of fact, and because of accounting rules, these are allowed to be shown as debit, as allowed to be shown on the debit side of profit and loss account, and not capital expenditure. Capital expenditures has to be amortized or should be depreciated. If it is a tangible asset, it has to be amortized. Sorry, if it is a tangible asset, it should be out depreciated, and if it is an intangible asset like goodwill, patents, copyrights, it has to be amortized over a certain period of time. As you know, popularly, as we discussed in accountancy rules. The next one, expenditure should not, okay. Expenditure should be related to previous year only. So any expenditure which is to be claimed to be shown on the debit side of profit and loss account as an expenditure for that year should be of that year only. It should have been incurred in the year in which it has taken place. That is in the, for the example, 2019-20 is the previous year. So that expenditure, if you want to claim as an expenditure, then it should have been a expenditure which should be related to the previous year 2019-20. If it is a future expenditure or a past expenditure, no, it is not allowed to be shown on the debit side of profit and loss account. It should be shown in that relevant year only as an expenditure. Next one is expenditure should be related to the type of business or business carried on by the assessee. So I will not discuss much about this. Next one. Now this is the format. This is the most important format of finding out uh, or determining the profit and loss from business and profession. So this format has to be followed to arrive at the exact figure of profit or loss from the business. So you can take a snapshot of this particular slide, and while doing numerical problems, we are going to use this particular format and determine profit from business or loss from business, or profit or loss from profession. Okay, with this, I will end the session, and we will discuss further about this chapter, income from business or profits or gains from business or profession. Thank you so much for patience listening.